Welcome back. Watch us on a halftime report. Continuing with corporate conversations, then ACME Solar Holdings is the next management. The stock surging in trade today. The company reported a good third quarter performance, and you can see the stock is locked in a 10% upper circuit. To discuss this and more, we are joined by Nikhil Dhingra, who is the CEO at ACME Solar Holdings. Nikhil, good afternoon. Thank you for joining in. I'll start off with your capacity. What's the total tied up capacity that you're expecting by the end of the financial year, this and the next financial year as well? If you could share some numbers on that front.
Sure. Thanks a lot. So we have a current capacity of 2540 megawatts, which is currently operational, selling power on a 25-year PPAs. So this capacity is expected to go up by 350 megawatts in the upcoming quarter or the quarter after next. So this will take us to around 2900 megawatt, and then a 100 megawatt plant is expected to come up after that in the quarter after that. So 3000 megawatt. And of course, other than that, we have around 4,400 megawatts of under construction projects, which will be coming up in the next 2 to 3 years. 27-28 is the timeline for that. So we will be targeting to reach 7 gigawatt, which is our contracted capacity by 2027 and 2028. And this ramp up will be starting from June 26 onwards. Each of these plants will be coming up. 4,400 megawatt will be split from June 26 onwards, going till December 28.
You've given us a projected, EBITDA run rate at anywhere between 1750 to 1800 crores in the presentation. Just wanted to know, with the ramp up in capacity, what is the steady state EBITDA run rate that we should be working with? And this largely because of one of the deals that recently happened. You got a 250 megawatt FDRE project from NHPC at a tariff of nearly 4.56 rupees per unit. Analysts are actually assuming 50% higher EBITDA from current levels from this project. Is that assumption accurate? Could you give us a sense of how one should look at your EBITDA from here on, and throw some light on this one as well?
Sure. So we commissioned 1.2 gigawatts of capacity in this quarter, right? So the EBITDA we are guiding on is the operational capacity, which is already operational and logged in with the PPAs and already selling power. So this EBITDA we are saying is because of the operational projects, which take typically 2 years to build. So this 1750 is from already operational assets. As we add projects, like I guided, like in next 2 quarters, we are going to add 450 megawatts of capacity next 2 to 3 quarters. So that will take this EBITDA to upwards of 2100, 2200 crores range. This is the operational EBITDA I'm talking about. So what we want to guide on is the operational EBITDA numbers, where once the asset gets operational. So accordingly, we have guided on from the 2.5 gigawatt we have, we will generate 1750 to 1800 crores of EBITDA. In terms of the bid you spoke about, that is the bid we have just won in the last quarter or so. So that will take some time to get into our revenues. And of course, that will get into our revenues maybe in 2 years' time, because 2 years' time is the time at least it takes from a bid to operational date. And in terms of the EBITDA margins from those projects, so in a solar or any renewable, the EBITDA margins at a project level are typically 90%. And they remain around that because there is no fuel expense, like we mentioned earlier also. So in terms of the EBITDA margin, 90% is there. But in terms of the revenue itself, the CUF is higher because you are supplying peak power. So you get as closer to thermal as you can by supplying a CUF of around 55 to 65%, depending on the configuration you're choosing. So on a per megawatt of contracted capacity, the revenue is higher by the number you mentioned. Typically, they will do in a solar plant, you do a CUF around 30% on the peak basis. Here you're doing 55%. So revenue per megawatt of contracted capacity is essentially double. So that's how it works on the FDRE side.
So if we do just rough math, right now you have about 2.5 gigawatts capacity. You are targeting 7 gigawatts by in the next 2 years, along with some of the orders that you won, etc. Your current EBITDA run rate is close to around 1800 crore basis the operational capacity. Multiply that by 2.5 times, given your capacity increase as well. Do we expect your EBITDA to, touch that 4,000, 4,500 crore mark by FY28, FY29? Would that be a fair assumption? Could it exceed that given, these orders that you win as well? Should one work with a number closer to 5,000 crores?
Yeah, so it will see in terms of the numbers. Like I said, the revenue is to divide. You can say 55 by 33 is the revenue in terms of the units, and of course the tariff is also higher. So it will be higher than what you said. It will be substantially higher than what you said, simply because the tariffs are also, let's say, 2.5 to 2.8 is the solar tariff. In an FDRE, it is 4.5 rupees, and the CUF is also around 2 times. So it will be substantially higher than that, the number you mentioned, once we commission the 7 gigawatts. And that, of course, can be estimated by any analyst basis the tariff which is available and the targeted CUF which is also available.
Not every viewer is an analyst, so if you could help us, understand how much does that mean when it comes to substantially higher? Are we looking at numbers closer to $1 billion then?
See, right now we are not giving any guidance on that. So it will be. What I can say, it will be much higher than 4,000 crores, which you mentioned. That we are not giving any guidance on the numbers. But since our business is very predictable, that once we operationalize, then I am able to give you a guidance, because then I can say that I'm generating this much power. For me to comment on a future number, it will not be possible today in terms of the 2027-28 numbers. I think it will be best done by analysts basis the PPAs we have and tariffs we have.
Nikhil, one final question, and if you could quickly tell us, you spoke of adding capacity. How much are you going to spend on that? And if that is so, how does that impact your debt picture? What's the current debt? And if you plan on bringing it down, how will that impact your financial performance in terms of bottom line margins and so on?
Right. So, see, in terms of the debt, we have mentioned that we will always be under 5.5 times debt to EBITDA, right? Because EBITDA is what helps you to repay that debt and what helps you to generate the free cash flow to equity. So right now we are very much under that 5.5 times on a debt to EBITDA basis. Our debt has, of course, we have paid down a lot of debt in this quarter of around 2,100 crores. Because we raised money of 2,400 crores. So all of it has been used for repaying debt, the primary capital. So right now we are at this level, which is debt to EBITDA very comfortable. So when we build a project, typically we take 75% of money as debt and 25% we have to invest. And this debt is long-term debt because our PPAs are for 25 years. The contract for sale of power is 25 years. So you get a debt closer to 18 to 20 years of repayment cycle. So 5.5 is the level we are quite comfortable with. And each of our project is designed to service this debt at a much under that 5.5 types of all of our capex, all of our financial planning is done with assuming that we will never cross that 5.5 times debt to EBITDA number.
Right. Even if you do, a little over 4,000 crores, as I said, substantially much over that 4,000 crores, I said, your debt would peak out at close to around 25 to 30,000 odd crores as well when we speak about 7 gigawatts. Just a final quick question on each of your capacity. What is the typical payback period?
Yeah, so see, in terms of that's a very important thing for a utility like us, renewable utility like us, more so because we win our projects in the bids. So very important for us to be capital efficient in terms of the return on capital employed. I think we have mentioned in our presentation also on a pre-tax basis, we do 14.5%. So if you just look at that, it's around 6 to 7 years on a capital invested. On the equity basis, the returns are slightly higher. So 6 to 7 years on a capital employed basis.
Right. All right, Nikhil, thank you so much for sparing time and joining us today. Wish you good luck for the road ahead. The management of ACME Solar, the stock locked in a 10% upper circuit. Take a short break as we count down to the budget. On the other side, we get you the key expectations of the defense sector from Finance Minister on Saturday. Stay tuned. Back on the other side.